Hey, what's up guys? Today we're going to talk about counter trend trading. Now, what do I mean by counter trend trading? Overall, if we're overall bearish on a trend, we can look for buy opportunities to either scalp it, trail your stop aggressively, partial heavily, then continue to the downside, hence counter trend trading. Now, I'll give you a good example which I took for the past couple of days, a day ago, is overall on EU, we see a bullish move to the upside. As you can see, breaking structure here, breaking structure here, breaking structure here. Then we broke the structural point over there. But let's just reverse this point to here so I can explain further. Now, the reason why EU is currently on a bullish trend to the upside on lower time frames, because overall on the larger time frame, or even on the larger time frame, the trend is bearish and we haven't made a good or a healthy pullback, on my opinion. Now, that's why on lower time frames it's forming a bullish move to the upside, because it probably wants to mitigate some of these supply zones over here, grab some liquidity, fill those imbalances. In short, mitigate some of these zones over here, or even go higher. Now, as you can see on EU, we broke a structural point here. Now, this is a debatable question. If it broke the structural point over here, now obviously on lower time frames, we are now on a bearish move to the downside. Now, that is true. Why is it moving? Why is it on a bearish move to the downside? It's probably done. Some people might argue that this is now a healthy pullback. Then it could be right, they could be right, and also they could be wrong. But for my opinion, currently the trend is, why is it breaking the structural point here? Because if we look on a 4-day, a 2-day, the current price point is currently looking like this, just an impulsive move. It hasn't made a pullback yet on the 2-day or the 4-day. Now, I'll prove it to you. Maybe on the 2-day. Yes, as you can see, currently on the 2-day, if we go and replay here, this was the bullish move to the upside. As you can see, price hasn't made a pullback yet from its bullish trend to the upside. As you can see, it broke some structural points over here, and it hasn't made a pullback yet. Hence, on lower time frames, why did it break a low structural point, forming a bearish move to the downside? It is probably, again, we are just speculating on the market, it is probably wanting to mitigate some demand zones over here on the downside, hence making a bearish move to the downside. Let me just play this out, or forming a bearish move to the downside. Now, what do we do from this point is either we wait for another break here, then we can enter on some demand zones here to continue to the upside. Or what we can do, since we believe in the fractal nature, is look for scalping opportunities. Now, let's say roughly there, general there, or I had a more refined zone here. This was my first POI over here. Since it went lower from that certain POI, doesn't mean we now quit on looking for entries here. We look for a possible reason why price went lower. Again, it's probably grabbing this liquidity, the liquidity of this low, and wanting to mitigate a more refined demand zone over here. But we are focusing on counter trend. Now, so overall, since I've explained on the 2-day chart, we are still bullish. We're still overall bullish, since I want price to come and go higher to mitigate some of these zones. Now, it doesn't mean we're in a bullish trend, we look for buys only. Again, you could do that. But since we believe in the fractal nature, meaning what happens on higher time frames happens on lower time frames, is we can look for scalping opportunities. Here, we see a break of structure. Now, if we see another break of structure from this point, we can look for scalping opportunities again. But we need to formulate a reason why we want to go counter trend, because again, the pro trend is overall bullish. Then we need to look for a viable reason where we can have a edge on the market. We have a little bit probability for it to actually happen when we do a counter trend. Now, For example, let's just do this is currently a live price point. If you see a break of structure there, then why would I look for scalping opportunities, supply zones there, then continue to the downside? Why would I look for a counter trend? Why would I look? Because overall, it's the same thing with the daily time frame. As you can see, we've seen the daily time frame, or the 2-day to be exact, or the 4-day. We are still in a impulsive move to the upside. Price hasn't made a pullback yet. Again, price doesn't need to do a pullback all the time. This could continue higher, but we can expect something where we can make profit from. Now, if it breaks structure, if it on lower time frame, if it shows breaking of structure, then it's probably wanting to mitigate some of these demand zones here, then to continue to the downside. Now, if you look at it, it looks like a normal trend. Higher high, higher low, then we're expecting another higher high. Hence, we can look for a valid counter trend move. At the same time, we can add more probability by adding certain supply zones there. Now we can mark up this specific supply zone there. As you can see, a wick on lower time frame. It's gonna look like a last up move before the down move, hence supply and demand zones. Now we can expect price to continue to the upside. Then if it breaks structure, we can look for counter trend trades for price to go lower, mitigate some of these demand zones, then continue to the upside. At the same time, managing your trades, trailing your stop properly, and partialing properly, which you can benefit, or which you can make money in the long run consistently, and obviously in profit. And again, if you want a more probable setup when doing a counter trend, look for reasons why price might do a pullback or a certain pullback from that point. Hence, giving you an example from this part, a supply zone where price could possibly bounce off, create liquidity at the same time, mitigate those supply zones, then you can look for sells there and partialing heavily, hence counter trend, then continue to the upside. Now I'll give you an example where I actually took a trade. Now we see price reacting to these zones. So what I did is I went on lower time frames. Let's just replay this back. So we're on the lower time frame structure, or the lower time frame of that low point which I took sells from. So we see price reacting to these demand zone here. So we're expecting a move to the upside. Now, why did I look for shorts here? Since we believe in the fractal nature, we see price, or we see setups where we can benefit from on way more lower time frame. But again, do some back testing, do some forward testing. Again, doesn't mean I'm profiting from this current strategy, that it's gonna happen, the same thing is gonna happen to you. Again, some things might not work for you, that might work for me. So what we do is, why am I looking for shorts here? Since I see a break of structure here and a break of structure here, then we can formulate a reason why is it breaking structure. Again, it's probably doing a pullback from this high point and low point, hence creating, we want to see a higher high, a higher low, then a continuation for another higher high. Now, as you can see, price broke the structural points here, creating a bullish move, tapping the 50%. And if you've seen my other videos, that I consider a pullback, or a healthy pullback, is price to tap on the 50%. As you can see, price filled these imbalances over here. Now, this is a very risky setup. So again, counter trend trading is a risky setup, but again, if you risk manage properly and trade and manage your trades properly, you can benefit from it in the long run. Now, as you can see, this is a very risky setup because I was looking for shorts on these supply zones over here. A more refined one I'll explain later. Again, my current thought process for this is, if price is happy with this certain pullback, then it should break these easily, or create a tiny bit of liquidity, then break it easily to continue to the upside. Now, then if price shows weakness, then it's probably wanting to mitigate more imbalances and mitigate more demand zones before continuing to the upside. Again, this is just expectation. We are just speculating on the market. We can never predict on it. Now, sorry, I had to cut because my neighbors are doing some construction and it's making some loud noises. But currently on the 5-minute, as you can see, we have been performing very fair pricing, meaning it's mitigating some supply zones or mitigating the supply zones at the same time, some imbalances. As you can see, we see supply zone here got mitigated by this one, supply zone here got mitigated by this one. As we can also mark this up, let's just mark this up, the supply zone, to look for entries later. As you can see, impulsive move, hence not creating on lower time frames a proper break of structure or a Wyckoff distribution schematic. This one got mitigated by this one by this one, mitigated, this one got mitigated, this one got mitigated. So what we can do is go on lower time frames to look for unmitigated zones or unmitigated supply zones. As you can see, price has been building liquidity here, meaning it's probably wanting to break those, grab those liquidity, at the same time mitigate some supply zones. So we can see a supply zone over here. Now this is I'll give you a example where what we did earlier, as you see earlier, let's just go on higher time frames, where we had our original POI over here marked up like here, but price went below it without giving any confirmations, just went below it. Then we look for another POI or reasons why price went lower, because we see a more lower demand zone over here. Now let's go back to the 1 minute. So we have the 1 minute here. Again, why are we counter trend trading over here? This is a very risky counter trend, since overall this is a very healthy pullback to then continue to the upside, because I want price to go lower on these POIs and demand zones over here. At the same time, I want it to form a larger schematic. Hence, I'm selling climax, AR, STNB, another creation liquidity, spring, something like that. That is my overall expectation, since this is a very impulsive move to the downside. Now, as you can see, if we go on lower time frames, the 15-second, as you can see, there is no proper breaks of structures. You can see price hasn't really gone below some of these points. Now we also want to see a larger time frame break of structure or a very clear break of structure. Now we have a point over here. Let's just play this out a bit. Make it a little bit faster. Taps into this zone. Now what we want is, as you can see currently, my thought process here is, if price breaks this point over here, then we'll look for sells. Why? Because I see a distribution. Hence my confirmation, my type of confirmation. Buying climax, AR, UT, creation liquidity, UTAD. Now we want a break of structure where we can enter directly on the breakout, or we look for retests on supply zones from here, then continue to the downside. As you can see, we play it. It just created liquidity, then went higher. This is why confirmation is good for you to have less losers. Now, as you can see, now we formulate a reason again. Why did price went higher from that certain supply zone? It's probably wanting to mitigate higher supply zones, or it's probably continuing to the upside. Again, we look for reasons why. As you can see, this was a supply zone over here. What we can look for is another supply zone over here. As you can see, we see a huge wick on lower time frames. That is a up move before the down move. Then we see another one over here, which this one got mitigated by this one. So technically, this is the last or the present unmitigated zone. So what we can do is extend this. At the same time, this is the edge of that point, meaning this could be, if we get the fib tool again, this is a very aggressive point for price to do a pullback to continue to the downside, because again, this is just structure, as you can see. Now, if you play this out, if I remember correctly, as you can see, price broke that point. Now we can go on lower time frames to see it more clearer. As you can see, price broke that point. We can see a buying climax, AUT, then AUTET. Now we can enter on this AR. We can enter on the breakout from that point, have our stop there. You can also look for a retest here, a more refined retest, better RR, less probability of hitting. You can check my other Wyckoff videos. I've explained it there. And as you can see, now this could take you out for sure. This is a very risky setup. What you can do is you manage your trades. Either you trail your stop or you partial. Now, where do I partial? How do I partial from this counter trend trade? Is what we do is currently, if we mark up structure point, structure point, structure point, structure point, structure point, breaks of structure. Oh, not really. This is a structure point here. Structural point, a structural point. Now, where would price might want to bounce? Again, the more probable or the more efficient way for price might probably want to bounce to continue to the upside is somewhere here on this certain demand zone here. Bounce, then continue to the upside. Again, it's forming a healthy pullback. So what we can do is partial within that zone or either lower on these zones. Now, I believe I actually did have this, oh yeah, something like here, because I remember that was not a 0.86 partial, it was 1.40. Yeah, it was somewhere here. Even though this is a 1.41, since this is a very risky setup, we need to be aggressive on managing our trades. So partialed 50% of my lot size here, moved to break even, then had other partial zones like the liquidity low here, then another partial zone on this demand zone here, because price go in, tap the demand zone and continue to the upside. Now my take profit was on these demand zones over here, the larger time frame demand zone, a healthy, a very good 1 to 11. Now if we play price, as you can see, we entered already, partialed here, move our stop to break even, partialed again, then we wait for price to go lower and partial again and have my take profit. And as you can see, let's go on higher time frames to play this more quickly. Let me just clear up the charts. The 5-minute, as you can see, if we play price over here, price tapped into this demand zone. Why did I partial? Why did I want to partial here? Again, this is all just structure. Healthy pullback, then this could then continue to the upside. Why did it go lower? It's probably creating liquidity from this resistance zone. Now, again, it's very important. That's why I always keep diving into structure or how to read the order flow or the structure of price, because that is the place, or structure is the base foundation where you can look for entries, where you can manage trades, exit trades, and enter trades on. So I hope you guys learned something new. As you can see, price broke in. I kept my trailing stop over here on break even, a little bit higher to cover up commissions, and price broke it. But I hope you guys learned something about counter trend trading, or learned some snippets of information from left to right. So thanks for watching. See you soon.